20 partners during that time. What do I get? Our customers appreciate our passion for innovation, our values, our work ethics and culture. They perceive us as a partner who brings deep technology expertise, true industry focus, and collaborates with them to build business solutions. Reflecting on all these meetings I've had with them, I felt quite good about the quality of the relationships built with our clients over the years. Strong, based on solid common values, on trust in our ability to deliver, on the conviction that we know them well, that they see us as a true partner, working with them, helping them transforming their organizations. What is clear is the context for our customer has changed enormously through the pandemic. While the traditional IT services will continue to be essential, the next big wave of opportunity will be driven by truly next generation services of cloud, digital transformation, Internet of Things, 5G. Enterprises in the post-crisis world are transforming their technology stack so that it enables them to operate with flexibility and agility. We've seen that a large portion of our customers feel the need to really accelerate digital transformation to stay relevant. Digital transformation of both the front end to gain better access to markets, i.e. to add an additional sales channel, and on the back end to improve efficiency and drive cost optimization. Modernization, including cloud, automation, and AI, is top tech priority. There is also a clear flight to safety, and trust has become more critical than ever in cybersecurity, in data, but also in partnerships. So a few examples of how we helped the customer accelerate digital transformation over the last months. One, a business, personal, and online banking customer in UAE intends to transform not only its existing products and services, but also disrupt and lead the market with new disruptive possibilities. WIPRO helped the bank to transform into digital experience by deploying digital 2.0 mobile app for retail customers.
That he's optimistic on the FMCG business. Puri says that ITC will see growth in the FMCG EBIT margin as they scale up. Well, those were the top 5 headlines from Dalal Street. Hello and welcome to Markets Today, the show where we'll tell you all that happened.
Interesting. Yeah. I hope you are still with me. I was going to share.
Please go ahead. Yeah.
I was going to share a second example. A leading multinational oil and gas company in the UK who partnered with WIPRO on operating model transformation for cloud migration journey. The exit of America data centers helped customer in cloud-first strategy and is the foundational core in modernization journey of going digital. So when it comes to the engagement, our customers want us to be global and local. While they are becoming increasingly comfortable with virtual, remote, and distributed work models versus physical, they also want proximity with their client partners who can provide them the business solutions with local context and industry expertise. We at WIPRO want to be a trusted partner to our clients in their transformation journey and enable them in achieving leadership position in their respective industries. Which brings us to the charter of set of priorities that we've drawn for ourselves. 5 priorities. First, growth focus. We will continue to invest in our existing account, shape large transformation deals through best-in-class sales excellence, and definitely leverage our partnerships with large technologies. Second, focus and scale. We will prioritize markets and sectors relevant for us and ensure we are in leadership position in our chosen markets. Third, offerings. We will continue to expand our presence beyond IT office, structure vertical solutions, leveraging our ecosystem of partners, both the large technology players and the startups. Fourth, talent. invest in specific capabilities such as domain expertise, digital transformation architects, large program managers, technology experts. Invest in talent to reinforce innovation, business, and technology skills. We will reinforce a high-performance culture to build the Champions League of talent. Fifth, simplified operating model. We need to be agile and empowered at the edge, which means a leaner organization centered around our clients. We plan to do an analyst and investor day sometimes next month, and I will share more details then about the specific. But let me now give you all a quick update on Q2 21 performance. We've had an excellent quarter with growth on revenue, expansion on margins, lower employee turnover, and solid growth of operating cash flows. The revenue growth of 3.7% in reported terms and 2% on constant currency terms was broad-based and was led by a robust pickup in volumes. The fresh volume we added has been highest over the last many quarters. We also hired 13,000 plus people during the quarter. Our stated guidance for Q3 21, despite the seasonality of furloughs, reflects this business momentum. From a sector view, consumer sector will grow faster on the back of solid deal wins. We remain optimistic on financial services sector, though it will be impacted by furloughs. Energy and utilities and technology sectors will return to grow in Q3. Communications, manufacturing, healthcare, life science will continue to grow moderately. The demand environment has improved from Q1, definitely. The intensity of sales activity continues to rise. The pipeline is robust. The overall pace of decision-making has improved through, though it is still a bit slower on the larger ticket hunting deals. You've seen expanded our operating margins during the quarter by 20 basis points to 19.2%. This was led by operational improvement of about 80 basis points, offset by 60 basis point impact of appreciated rupee. A higher offshore mix, improved utilization, lower employee attrition, and the benefit of lower subcontracting headed the operational improvements. We continue to emphasize on employee safety, as most of our employees continue to work from home globally. I want to thank them all for the incredible hard work and tenacity which has helped us deliver these results. I'm really very excited about the opportunities that lay ahead of us and quite encouraged by the acceleration in business momentum we have seen this quarter. With that, I hand it over to Jatin for his comments on the financial performance for Q2 21. Thank you.
Thank you very much, Thierry. Let me take you back what we said about this quarter. We told you that it's going to be a stable quarter. I'm happy to report we have delivered 2% constant currency growth. We are now guiding 1.5 to 3.5% growth for quarter 3. On margins, we had said that except currency fluctuation, we'll keep it in narrow band. And as Thierry mentioned, we were able to absorb the adverse impact of Forex movement and still expand operating margin by 20 basis points. We had an excellent quarter in terms of cash flows. If you see our operating cash flow to EBITDA ratio, that is roughly 127%. If you see our free cash flow to net income, that's 164%. If you see our Forex rate, that was 74.12. We still have about $2.9 billion, which is very consistent that we always follow of hedges as of end of the quarter 2. Overall, we are quite happy with the way we delivered quarter 2. I want to mention 2 more things. First is that subject to shareholder approval and required regulatory approvals, board has today approved a rupees 9,500 crores or $1.3 billion, which doesn't include the tax component on it. Tax will be separate at a share price of rupees 400 per share. This is what the board has approved and we have intimated the stock exchange. The second thing which I want to talk to you about is an exciting acquisition that we have announced today. Eximius Design is one of the leading players in VLSI and system design space, and that would become part of or fold of a larger engineering business of Wipro. And we are very excited to welcome them. We plan to complete this acquisition in course of Q3. With that, we are very happy to take your questions from here.
Thanks, Jatin. So, Mugdha from CNBC, can you go ahead with your question, please?
Yeah, sure. Firstly, congratulations to all of you on a very strong quarter. You've beaten estimates across several check boxes. Thierry, first to you, this is your first full quarter after taking over as CEO. Last time when we spoke in July, you talked about making bold bets and, challenging the status quo. Could you just tell us some of the important strategy changes or decisions that you've put in place? And of course, on acquisitions as well. There have been 3 acquisitions since you took over in July. Is that something can we expect more of these, and in which sectors such as cloud or cybersecurity? And also, if you can highlight the organic growth excluding the acquisitions as well, Thierry. Jatin, my question to you is on the buyback. Rupees 9,500 crore is a little lower than what we had seen in the previous years. If you can just highlight the reasons for that, and if you can highlight your overall capital allocation policy and plan for the whole year. Will it be up to 40 to 50% of the net income as usual, or will it be higher than that? And to Saurabh, actually to Bhanu, I want to ask you to throw some light on the customer commentary and the recovery that we are seeing in different segments. But really, if you can talk about the pressure still on energy, and also why the technology segment is still degrown, if you can just highlight some of that. And also, in your deal pipeline, what is the kind of pricing and tenure that you're seeing? And lastly, Saurabh, just want to talk to you about the whole H-1B visa issue. I understand, of course, that you have a strong localization in the US, but what is the impact that you're going to expect from the wage hikes and the slightly more stringent policies going ahead?
Mugdha, thanks a lot. It's a lot of questions in 2 minutes. Bravo for that. I will start with at least the four first point that I believe I've taken, and then you've done a good distribution of the questions to Saurabh, Bhanu, and Jatin. So I think we will cover all of them, hopefully. Couple of points. One is you ask about the organic. We are not, we are not disclosing organic versus non-organic in the way we, report our growth. Having said that, these acquisitions that we've done are strategic, but they're rather modest in size, right? So that is, for the time being, the case if you look at the deals closed over the last quarters. You asked about, our M&A strategy, and, there is no question that we want to be an actor, that we want to play a role in, the current market where there's a lot of acceleration of, be on the technology and on solution side. I think, definitely we will be active. We will continue to do tuck-in acquisitions that gives us a position in some areas that we consider as strategic. And we don't limit ourselves in terms of size if there is things that, make sense to us. In terms of strategy, I understand your impatience and I fully respect that. As I said, 5 axes of 5 areas of priorities, and I will elaborate more when we are together sometimes in, I believe, a good month from now and early November. In November, the 5 axes. One is, unleash the levers that will drive growth, and different areas. One, continue to clearly be more relevant and more impactful with our existing clients, with the ones that we've been working with for many years. We know them well, they know us well. We are well positioned to continue to grow these accounts, and we will invest in this relationship going forward. Second, clearly take our fair share of large deals. And again, we are well positioned to shape deals together with clients, and we will certainly endeavor to shoot for large deals in the next quarters. And third, On the first front is really the excellent relationship we have with our partners. And, I have huge ambition in the way we are going to work together with them. We have started already to engage at a different level with some of them, and that will drive growth certainly. The second axis I've said is around focus and scale, which is really to play on our strengths. Okay, what are the markets where we want to take leadership position? What are the sectors where we want to position ourselves in a bolder way? The third is really to work on the offerings portfolio. We have a lot of great assets across, our service lines, and we will continue to position our offerings in a sector-specific, sector-focused way to really be more relevant with our customers. The first axis is incredibly important in our industry, that is people-related, is around talent. And trust me, we will drive a very ambitious talent strategy to hire, grow, develop top talent in our organization, talent that really are making the difference in the market. And finally, I've said it last time we spoke, and I've taken this commitment. I will work on simplifying the operating model, drive more fluidity in the system, have less time focused internally and more time for the customers. So those are the 5 axes of the strategy. Again, more to come when we speak in a good month from now. With that, Jatin, I hand it to you for the next ones.
Sure, Thierry, thank you. So 2 questions which are for me. So first, Mugdha, this is an absolute right size from the need of the cash that we see, but more importantly, also in line with what we have done in past. It is not very different. You have to keep in mind that there is a cash outflow for the company, which is for tax, which is roughly, I'm just saying, anywhere between 2,000 to 2,400 crores on top of the 9,500 crores that we have already spoken about. And therefore, we have thought through that. We are transparent in our communication. This 9,500 comes directly to shareholders, and tax is excluded on that. So that is one aspect of that. Also, if you see, from our cash on hand standpoint, we are at about $4.6 billion net of cash. And if you take out 1.3 and then you take out the $300 million odd for the tax, then we would be left with about $3 billion, and that is the flexibility that we have always maintained on the balance sheet. So that is pretty much consistent with what we have done in past. Going forward, our promise remains 45 to 50% of net income. However, we are very conscious, and board looks at it from time to time when we have extra cash on the balance sheet compared to the strategic use that we can put it to. In those cases, board has always deliberated, and we have always returned the cash to shareholders. But that is a call which board makes depending on the strategic roadmap that we have at that point in time. So our promise still remains 45 to 50% of the net income every year within the actual execution that we have done in last 3 years or 4 years that you have seen us do.
Yeah.
Bhanu?
So Mugdha, this is Bhanu here. So you asked us about the customer commentary. You have seen our Q2 performance, right? The Q2 performance has come on the back of good volume growth. And we have done a very good, solid execution, right? And that's the reason why you would see a growth across the strategic business units, across the geography, and across the practices. And we believe that going into the world, we believe that the consumer business will continue to grow, right? Because of the solid wins that we have. And we are also very optimistic of the growth in the financial services. We understand that, yes, in Q3, there will be furloughs, but we believe we are very optimistic of the Financial Services Act as well. Energy and utilities and technology, they will return to growth in Q3. And communications, manufacturing, and health will continue to grow moderately. That's the sectoral view of the world. And our pipeline, that's the question you asked again, Mugdha, is that our pipeline continues to remain robust and is almost now back to the pre-COVID levels. We see a good mix of large and small deals that is there. The sales activity intensity has increased, and we believe that we'll have a good share of winning the pipeline that we have, a fair share of the winning that we have, because of the strong offerings that we have and the improved positioning that we have in the marketplace. So overall, that's the commentary that we are hearing from the markets and the customers. Saurabh, over to you.
Thanks, Bhanu. We've got two questions. One is on the new ruling on H1B. Whilst we are still looking at the new notification, I must tell you that for us, it's been a 3-year strategy. We have been looking at localization for the last 3 years. And today, as we speak, we have more than 71% of localized in the US. So from a business standpoint, we don't see that this is going to impact us. We have planned this over a period of time and move forward. On terms of wage hikes, as we had called out earlier, we would be doing a series of employee interventions during the current fiscal. First of all, in Q2 itself, we have paid 100% variable pay to our employees. Second is we have also gone ahead and committed for promotions for 80% of our people in Q3. We are looking at our increment cycle for our junior employees whom we have hired from the engineering colleges. So a number of these employee interventions will be done during this quarter as we see good momentum from a business standpoint. So both, I don't see a challenge from an H1B, and we're comfortable from the employee interventions we are doing.
Chandra Ranganathan, can you go ahead with your question, please?
Yeah, hi, can you hear me?
Yeah, Chandra, go ahead.
Very well.
Hi. Thierry, hi, my first question is to you. In your opening remarks, you spoke about how you will simplify the operating model and work on making Wipro a leaner organization. Can you elaborate on that? What do you mean when you say leaner? You need to correct the employee pyramid. And secondly, how are you going to ensure that all this reorganization doesn't come at the cost of growth momentum? Because traditionally, Wipro has gone through a series of reorgs that end up coming at the cost of business momentum just at a time when business is picking up. Jatin, don't you think buyback is an inefficient form of returning money to shareholders because there's a buyback tax involved? Why are companies choosing buyback instead of dividend? Bhanu, just a word on the sector-specific trends that you're seeing. In terms of the deal flow, are the big deals back? Are clients waiting for more certainty after the US presidential election? And finally, sort of just want to understand, a couple of weeks back, we reported on how Wipro will kick off promotions for employees in December. Have you decided on how many employees this will cover? What the outgo is going to be, what the quantum of hike is going to be, if you can give us some clarity on this. Thank you.
Sure.
Chandra, good evening, and thanks for the question. So I'll start with the one on the organization and on the risk of internal focus. So, I didn't make any secret of that. I think the first time we spoke, I shared the fact that, there was a real need to simplify. And I think, frankly, Chandra, it is a never-ending story in our world, in our industry. It's always because we have large organizations, we have complex organization, and it's always about how can we be leaner? How can we be, having less layer of leadership, having more time for the client? So can the systems help us being more efficient? Can the processes be simpler and more efficient as well, and can we have the best organization? It doesn't have to be a big disruption. In particular, my absolute focus is to make sure that we keep our 2 eyes on the market every single day. But it's also a reality that it's a never-ending obsession that we have to constantly refine the model. So, if you clarify points of accountability, it will reduce the need for internal work. If you improve the way you are the different steps of control in a particular process, you reduce the time and the number of people involved into decision making, and everything is driving more agility. It's absolutely clear in my mind that the absolute number 1 priority, and I've started with that in my 5 points, is around market focus, market growth. Myself, Chandra, if you think about that, over 100, I think I've counted something like 105 clients to date, and more than 20 partners. It is at least 3 meetings per day, every single day. Never a day without seeing a client. That is the obsession I want to drive in the organization, and there is a very, very good traction at the moment in the organization. Actually, I tell you one thing, I'm pleased to see the intensity in the market that the Wipro team is showing at the moment. Saurabh, to you.
Thanks, Thierry. So Chandra, the question you asked me, we spoke about the promotions. So we will be doing promotions for, as I said, 80% of our staff, eligible staff. We haven't said on the numbers, but I can tell you the quantum of increments which we'll give will be the same as we had given last year. So it'll be in line with that to make sure that what we are doing is rewarding and recognizing our high-performing team members and colleagues. So they should be well recognized. So that was your question. Any other point I had missed out, Chandra?
Yeah, I had asked Jatin about why buyback, because it's inefficient compared to a dividend. So why are IT companies going for buyback?
Yeah, so Chandra, that's an excellent question, and I think world over, if you see Fortune 500 companies or you study a classical capital markets theory, you will see that buyback and dividend are both important way to return cash to the shareholders. Globally, you see. Now, you would always prioritize one in a context of a particular year, in a context of the regulations that you are operating in, and there is no absolute one right answer which is always true. So we look at it every year, and therefore our payout policy is not either dividend policy or buyback policy. Our payout policy is returning 45 to 50% of net income, and we will choose a model that looks the best for all our shareholders. We continue to talk to them, and we continue to get feedback. What is the methodology that would go augur well in the current context.
Ajit,
Bhanu, you had a question.
Yeah, Chandra, this is Bhanu here. Chandra, like I said, I think the way we looked at the sales activity intensity, it continues to rise, and our pipeline has improved, and it has our cross funnel ads remain very healthy. Definitely, the demand environment has improved versus Q1 that we are seeing. The overall decision making has improved. A bit slower than some of the larger hunting deals, but we do believe that the sales intensity has increased significantly. And our pipeline does have a good mix of both large and medium-sized deals, right? It also has both our existing customers as well as new logos. And we're also seeing good traction across all the markets of Europe, UK, continental Europe, right? We're seeing the markets are looking very strong for us. And in terms of the propositions that we are seeing, the digital services that we sell around our customer experience and modernization, we're seeing a good traction on them. And specifically around infrastructure, all the new things about SD-WAN, right? Some of the modern workplaces, right? All the things that the customers are looking for on their digital journeys, right? Those are the propositions that are working very well for us. Yeah.
Thank you. Sajid Mangat, you can go ahead with your question.
Good evening, gentlemen. My question to Thierry is about, in his opening remark, he said,
Sajid, I'm not able to hear you. Sorry, can you be closer to the mic? I cannot hear.
Am I audible now?
Better.
Okay. Thierry, in your opening remark, you spoke about the fact that you spoke to over 100 clients. I just want to get an idea of the client commentary that is coming in after the first quarter and the kind of work now which is now coming into for IT companies and IT services companies like you, especially with respect to cloud or maybe IoT or 5G. Some may argue that 5G is something which is going to come in next 2 years or so. But what kind of work it is coming in for the IT services companies. So a little more, depth of the kind of commentary which the CEOs are telling you when you speak to them, maybe 3 CEOs in a day, to give a holistic view of the environment which is there and the demand that is getting generated for the IT companies. My second thing is about the total contract value. What was the kind of total contract value that you had in the second quarter or for the first 6 months of the financial year? And Jatin spoke about the fact that operating margins would be in a narrow band. Is there a scope to increase it beyond 20% in the current fiscal? What kind of steps that you can take? Or will it be between 19, around 19 in the current fiscal?
Okay, let's see. Okay, Sajid, understood. So I'll respond the first question on the market. Banu will take the one on the size of deals. And Jatin, you'll explain the definition of a narrow band, I guess. Okay. So Sajid, I joined Wipro at a very interesting moment of our times, if you like. And the reality is that for our industry, it matters. It matters a lot. It's not a particularly standard moment. It is, but it is not a phase. It's an acceleration of what's happening. So let me explain that. I think it's been very clear to our customers over the last 6 months that, the technology has helped them to continue to run their business. And by the way, it was quite nice for me to hear the absolute outstanding feedback they were giving to us and the kudos to the Wipro team for the quality of work in the transition to working from home and the no loss of productivity. They've all been, overwhelmingly been positive about the fact that Wipro had been a great partner in such a difficult period. So that's, is clearly the first fact is that over the first 3-4 months of the crisis, they were mostly focused on getting the operations up and running and protecting their top line as much as they could and reduce the spend to mitigate the overall impact on the bottom line. But they've, as we've progressed into the last 3 months, they've realized the impact of having the right technology and the need to have, in particular, a cloud strategy and execute on it because it drives agility. It allows you to be a lot more, efficient and add, new streams of revenue, develop all new products and services and so on, and drive more agility in the organization. So what I've observed is, there is no doubt that there is an acceleration of the transformation in pretty much all the industries. And I've spoken to clients from many different industries. They have a transformation journey. It's always about how can I reduce the cost of running the business do some savings here and reinvest part of it into our transformation to prepare the future. All right. Cloud transformation, as I said, customer experience, how can we improve? How can we create different channels? How can we better know our customers? But also, how can we be more efficient? How can we reduce the complexity of our organization? How can we be more nimble? How can we be? How can we reduce the number of applications? How do we migrate them onto the cloud? How do we sunset, redundancy, and so on and so on? So this is, the theme of cloud, no doubt. Internet of Things platforms. It's about digital transformation, and definitely in this context, and also in the context of having most of their employees working from home, security at the top of their priority. So, to be honest, Sajid, all of that speaks to our industry. We have, we are at the center. We are not a problem. We are the solution for the industries and the company industries we are working with. Banu, over to you.
Hi, Sajid. This is Banu. Hi. So, Sajid, as I explained earlier, the demand environment has become much stronger, and we are seeing traction across the various markets and the sector, right? While we don't disclose the individual order book values and so on, we do see a good mix of large and medium-sized deals in our pipeline. And if you look at the performance in Q1, right, you would see that it is across the sectors, across the geographies, and across the service lines and capabilities. So we're seeing a good mixture of the demand environment right now. And we are very confident that we will win a fair share of those, what is there in our pipeline right now, right? And all the sales activity intensity has increased significantly, right? And we do see a good amount of addition to our funnel by the sales teams, our sales teams being very active and meeting customers very often. So overall, the demand environment is looking better for us. Jatin?
It was on mute.
Mr. Jatin, you're on mute. Please unmute your line and proceed.
Sorry, Sajid. So, I will contextualize your question on two dimensions. First is the overall company priority and focus. And those are the top 5 that we articulated. And if you see, the first one there is growth. So we will do what is needed to grow and catch the momentum. And therefore, investments would be a critical aspect as we think through what we will do over the next 9 to 12 months. So investments will remain our priority because growth remains the top priority. Having said that, we maintained our margin in a narrow band in Q2. Even going forward, our posture is that we will like to maintain a narrow band around the number that we have delivered, which is around 19%. And that's the overall goal, Sajid. We are not giving a separate guidance on margin for coming few months or coming few quarters. This is the overall philosophy with which we like to manage our operating margin.
Thank you. Rukmini Rao, in the interest of time, I request you to ask one question. We'll follow up later on if possible. Rukmini Rao, you can go ahead with your question.
I hope I'm audible.
Yes, Rukmini.
Sure. Thanks.
Yes.
My question is to the CEO, Mr. Delaport. Want to get your thoughts quickly around one thing. Is there a time frame that you're working with to pivot Wipro around the 5 points that you spoke about? And where does Wipro have its task most cut out of those 5 points that you were talking about? And also some insight into what Wipro is doing to get back onto the big deals table. Thank you.
Yeah, Rukmini, we are working on it now. Okay, so it is not going to be a lot of time waiting for that. We are in action now. We have started to work along those 5 lines, and we are, will move as rapidly as we can on each of those 5 chapters. Okay. The other
You know,
question was,
where does Wipro have its most stars cut out of those 5 points that you're talking about?
well, we are building, it's large deals is always follow a different cycle. It takes a little longer. It's also not RFP based most of the time. You need to shape them up. We have some in the pipeline, so we progress. We've dedicated a lot of attention and time and leadership attention to it. And we will see. But we will definitely, if you should look at 3 different steps. Step number 1 is, shaping up and having more and more of these large deals in our pipeline. Second, obviously close one of few. And third, obviously, is to work at the back of those large deals to continue to develop, relationship with our customers. So it's going to be in a phased approach, but we're in action now.
Thank you. Swati Murthy, you can go ahead with your question.
Hi, I hope I'm audible. My first question is to Mr. Govil regarding the hiring outlook. So the text mentioned 12,000 were hired this quarter, 3,000 were freshers. If you can give me some sense of how many were laterals and what's the outlook for Q3. And the utilization has definitely improved. In fact, much better than the pre-COVID levels, that's 76.4% for a gross utilization. If you can give me some sense of that. And so, Thierry, my question is the guidance. The last time when we spoke, you mentioned you're not giving guidance because the situation is still uncertain. So now that you're giving guidance, does that mean that Wipro is confident of its recovery despite the COVID? If you can give me some color on that, that would be great. And one more on the work from home. You had mentioned that the borderless model is working, but Rishad Premji in a recent event has mentioned how coming to office is going to be really important for retaining the company culture and creativity. If you can just elaborate on this point as well.
Yeah, so I'll take point 2 and 3, and Saurabh, you can take point 1 and add up on the point 3 as well if sure. You feel like. So the first point is so the first point was the third point on the work from home is my view is that we will go for an hybrid model going forward. We still obviously spend time with our customers to also make sure that they are progressing. We need to be aligned and progress in line with our customers as well. At the end of the day, we must adopt models that are aligned with their way of working. But my view is that we will certainly go for a hybrid model. Not everybody will work to the office every day. Not everybody will work from home every day. Where I fully agree with Mr. Premji, of course, is the fact that, yes, we need to have the social interaction. We need to connect with the people. And therefore, I don't think it's conceivable to have an organization where no one would meet ever again at the office. Connecting is how you build the spirit, you create, the sense of the culture of company, the values in common, and so on. But at the same time, the flexibility is good. We'll certainly respond to a lot of expectation from some of our employees. And so that's how I see the things. Saurabh, you want to add one thing on that?
No, Thierry, is fine. It's basically very clearly that hybrid, and we'll decide as we move forward. As we said, 98% of our people today continue to be working from home, and as of now, we are looking at most likely till middle of the end of this year. It will continue depending on the situation, and we'll take it forward from there. But ultimately, culture building happens when people come together in office. If I can take it forward on the hiring question, Thierry, Swati, you asked very robust hiring this quarter, both for laterally as well as for from campuses, and we'll continue to see the same momentum going forward. There's a growth, the business momentum, and we need to make sure that we are fully geared to manage that growth coming from the business side. So we will hire both laterally from campuses in the geographies in India and in the new technologies as the business need is. We're not coming with a number, but I can only tell you it's a very robust hiring plan we have in the coming quarters.
We have time only to take one last question.
No.
Thierry hasn't answered my question about the guidance.
I'm sorry.
I'm going to answer it. Don't worry. So your question on the guidance, and you're right. The first time I spoke to you in July, it was a particular context. It was a context of crisis just unfolding. Literally, companies trying to understand implications. It was difficult to get visibility, and so we felt that it was probably better to not do a guidance given this context. We are now in a different situation 3 months later. We had guided you on the fact that we would be stable in revenue. We've managed to do better. We have a good visibility on our business in Q3, and therefore giving a guidance of 1.5 to 3.5% of growth quarter over quarter seemed to us like the right thing to do.
Thank you. Kushal Gupta, you can go ahead with one question, please, in the interest of time.
जी नमस्कार, मैं कुशल गुप्ता बोल रहा हूँ जी बिजनेस से, और मेरा सवाल आप सबसे है, एक ही सवाल रहेगा। और यहाँ पर मैं जानना चाहता हूँ कि पैंडेमिक के समय में जब हमने देखा था कि काफी सारे क्लाइंट्स जो हैं वो शायद कॉन्ट्रैक्ट्स नेगोशिएट कर रहे थे या कोई भी नई डील्स हो रही थी, तो वहां पे प्राइस नेगोशिएशंस में भी हो रहे थे, काफी आईटी कंपनियों ने ये बताया था। तो अब जैसे आपने गाइडेंस भी दिया है, वापस से लौटती हुई नजर आई है, क्या ये सिचुएशन खत्म हो चुकी है और अब क्लाइंट्स कंफर्टेबल है, और जो पहले के बिलेबल्स वगैरह थे वहां पर वापस से पेमेंट जो है वहां पे कोई डेफरल नहीं है? आप इस पर क्लैरिटी अगर दे पाए तो।
Kushal, I will take that question, and if you don't mind, Kushal, I'll answer that in English for benefit of everybody. So you are right. The priorities of customer is rapidly moving. We have worked very closely with them over the last last 6 months, and I wouldn't say some phase is behind or some phase is not present. I think what is relevant is you always remain with the customer and handle the situation which customer wants us to handle. So there were certain different priorities, certainly in, let's say, April, May, and that we tackle and we work very closely with our customer. And we are now in a very different phase where customer wants certain agility, customer wants to move a technology stack which probably didn't help him during the COVID times and wants to move to a different architecture. We are working now with that new priority for customers. So clearly, idea is not to see business in phases, but really see in a single phase of how you are the closest to customers' priority. Yes, we continue to collect our cash very well. If you see as I spoke in our operating in my opening remarks, our operating cash flow is 127% of our EBITDA, and free cash flow is 164%. So really, we are continue to keep a very, very close watch on our collections, and that have remained quite strong.
So we have absolutely run out of time. Thank you all for joining. Take care and be safe. Hope to see you all in Jan. Thank you.
Thank you. Bye.
Thank you. Thank you.
Thank you.